Well, hello everybody. Stock Talk Thursday. Blair Nightingale here. Take a little bit of time every Thursday, 6 p.m. Central Standard Time to really just go in and talk stocks. And we're usually talking, hey, what is hot right now? What is not right now? We're going to start doing something a little bit different here on Stock Talk. I want to take you guys through some simple, this is going to be a nice one-stop shop for you at the end of the week. Of course, we have one more trading day, but really getting to the end of the week here where I'm going to show you what's hot, what's not. I'm going to show you what is something that I am seeing that I think you should pay attention to in the market as a trader. Remember, here on Stock Talk Thursday, this is Tradeway. So we are teaching folks out there how to trade stocks. Okay, we're not just investing long-term into companies. We are learning to trade stocks. This is cash flow. This is building wealth, not necessarily managing wealth. This is what we are trying to do in our trading. So a little bit different approach. So that's what I'm going to focus on, show you something from the market that I think will be important, as well as I'm going to give you an update on the market news. There's so much market news out there, and I want to make sure to get you something that cuts through the noise. What is this really? What is all this news about? Well, it's just noise, like I said, because people are trying to tell you, hey, buy this stock, or have you paid attention to this thing, or I think this is going to happen, or I think that's going to happen. And that's really why we see so much news out there. So I'm going to cut through that. I'm going to give you a direct look at what kind of news is important. And we're going to go ahead and dive right in here. Okay. So last week we talked specifically about several, I'm going to go to a different chart here. Boom, go right there. Talked about several different stocks being hot. Okay. Now, we looked at the S&P, which was and is hot. The S&P is very hot. Overall, it's doing very well, okay? Very well. I'll move this up a little bit. There we go. You know, it's up 10% so far this year. That's what I was looking for right there, 9.5%. So the chart is very hot, but look what happened here, guys. And I'm going to set this up, and then we're going to move into the next section here because I want you guys to see something. Was it hot? Sure, it was hot, but it was moving sideways, sideways inside of this pattern. It hit resistance, went sideways, pops up a little bit. This is the day we talked about it, right? This is last week, right inside this purple box. It moves up, and then bam, down it goes, right? What happened? What happened? Well, we're going to talk about that, but I want to show you a couple other things first. Look at this guy, a couple days up. Is that hot? It's extremely hot, okay? But what happens? Last Thursday, boom, up it goes, down. Ooh, it moved down too. So we see two of the major indexes moving down. We looked at the energy industry as well. Look at this pattern here that we looked at. So it was moving in these lines. It goes out of there, uses it at support, kind of has this downtrend here, and then recovers real nicely. And this is when it really got hot. So what did we do? We went up, same thing, right? Pulled back from there. So here's what I want you to, well, let me go through the other two first really quickly. Gold, we looked at gold. So now we're getting outside of stocks, okay? Outside of stocks, looking at gold. This guy, big day up on Thursday. It moves up, tops out, and then we could put something like this guy in here. I would even, oops, move this guy up a little bit, like so. Okay, so that's gold. We looked at some crypto, lots of crypto news. Pulling back, almost everything. The four major biggest players in crypto right now, they're all pulling back. They're all coming down. Look at this run. This is where we talked about it, and it's going up, capped out at 40, almost 4,400 bucks, and then Ethereum starts to pull back. But let's just go back here for a second and look at something here. Now, what did I say about this as a whole? Is it hot or not? It's very hot. It's very hot. But notice how it has these rises, these peaks and these valleys, rising and falling, rising and falling, rising and falling, right? This big move up we had here couldn't have happened like that if it hadn't have fallen here, if it hadn't have fallen here, right? So what is my point tonight? Well, even hot stocks pull back, right? There is a rising and falling. And as traders, this is what makes patterns happen. It's what makes patterns work. Human psychology buys stocks, whether we're talking the big money or the retail money, buying stocks, pushing prices higher, no matter what the asset is, until they reach a point of resistance where profit taking kicks in, fear kicks in. We're going to talk more about that in a minute. And it pulls the stocks down, pulls the gold down, or whatever the asset might be. It comes down, right? There might be a news item. There might be something disappointing that happens. But it's funny how those things typically, right, coincide with resistance on the chart pattern, right? Resistance comes into play. So these hot stocks, they still move up and down. But what do you see on the chart? You see on the chart two things. Number one, they're moving down, but they don't move down as far as they did the last time, right? Sometimes we got pretty close here, not quite, pretty close. Moves down, up, higher. Moves down, higher than last time. Okay, up, down, higher than last time. So it's really just in a trend. It's just in a pattern. Where are we now? Right? At least as of today, right? We're looking at 6:08 p.m. Central Standard Time. We're at the 50-day moving average. We're pulling down. News is out there, very negative. End of the world. What's happening? Right? It's at the 50-day. Stocks pull back. Now, there's a reason. There's a reason why I did that in both the chart here and the news. We hit some all-time highs here. We pulled back. I've talked to you guys many times about the tech industry, something I've been talking to Tradeway students with about quite a bit, because we saw a sell-off in tech, and we saw a sell-off in tech because what? Well, because we got an inflation scare. And the last time this happened, we saw a pretty significant sell-off in tech just back here. We saw these bond yields changing. I talked about that in a previous episode. We really saw that happening back there. And it caused investors to rotate out of tech and into some other stocks. And that caused the S&P to fall pretty significantly. Well, this time, really focused on inflation, market starts to fall. So that's the news. We always teach our students that we look at the market tone by looking at two different factors. Number one, what's happening on the S&P chart. Number two, what's happening in the news. And are they congruent? Are they matching? Okay, that's what we want to see. A little bit of a divergence out there today, meaning they're not matching. But it is normal for stocks. It is normal for indexes to pull back, to retrace, we call it, to move back down to a support level. And we've been down to the 50-day many times now in the last few months. At least I wouldn't, maybe not many times. I guess that's a subjective statement. But when we move down into support, you can see we moved to the 50 here, 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 just closed above it here, there. And then today, a pretty significant move up off the 50-day, okay? So is the market not hot? Well, on the day for the last couple of days, it's been very, very not hot, right? It's dropped pretty significantly. And I like that. You say, oh, Blair, why would you say that? What do you mean you like that? Well, I'll tell you what I don't like. I don't like other people losing money on their investments. I don't like that. But as a trader, I like it when prices reset. They reset. And I also like volatility because it's in volatility that we get big moves. Now, I like that when the stock market is inside of a pattern. Okay, I don't like chaos. I like when I can look at the chart and recognize patterns, and those patterns tell me that that stock is hot. In this case, I haven't seen anything totally out of the ordinary in this stock. I look at the Dow Jones index, headed down to the 50-day, been there before. It's been really hot, right? Talked about that rotation. Dow Jones has been doing really well. Okay, Dow Jones is more primarily focused on industrial stocks, not the NASDAQ tech stocks and the S&P, which is more broad across the sectors of the economy. But we're down here to the 50-day, down here to the 50-day. So here we are, right? We pulled back, didn't quite even make it down to the 50-day. We just went to the low of yesterday. And now it's moving up. So it's not totally abnormal for this to happen, especially from all-time highs. But it was fast, okay? It was fast. So stocks tend to fall faster than they rise because fear tends to be a stronger emotion when it comes to investing and trading, right? In both cases, tends to be a stronger emotion than the excitement or even the greed that can tend to drive prices up, okay? So drops tend to be pretty fast. When they really catch some wind, they can move down pretty quickly. And so we saw that happening here in energy. And then obviously, and I will just say this, crypto is a little bit of a different animal. But this stock, obviously, or this coin, I should say, we looked at last week, extremely hot. Now, go back for a second. You say, Blair, you like it when it goes down. What do you mean by that? Well, I like it when it resets. I like it when the market has been going sideways for some 3 weeks with little move up, a little move down, a move up, a move down, a move up, a move down. That's what we call whipsawing, back and forth, not really sustained or continual movement. To me, that's not hot. I don't like that. It's just choppy. Now, we have some skill sets that help us trade. Our Step 3 program here at Tradeway that helps us do neutral strategies, meaning I can use options to trade the markets, and I actually don't need the stock to move a specific direction. In fact, what I want it to do is go sideways. If it goes sideways long enough, I make money. That's how that works. That's the potential of a credit spread, okay? Which is just one strategy we use in that sort of instance. But if I'm buying stocks, it's hard because it's back and forth. And remember, I'm trading stocks. I'm not just buying and holding. So I like it when it resets, right? It comes back, sets up for a bigger directional move. That is something that I like to see. And this volatility is just something that precedes that. Okay, that's just how that works. Now, before I go into the next section, let me just pause for a second. Make sure I say hi to everybody out there. If you're joining us live today, I know the majority of you will join us on the recording, but there are folks out there on with me live today, and I am always happy to know that you guys are there. So if you want to say hello, say where you're from, what the weather's like, anything you want to say, questions, concerns. I always invite people to disagree with me as well. If you'd like to, just go ahead, pop it right there into the comments, and I would be happy to dive into that, respond in any way, and just say hi to you. So thank you so much for everybody being here. So that's a look back. That's a look back on what we looked at. So the stocks are in great patterns, but they pull back. That is actually normal. And that's something a lot of folks don't really know. And it's something that's important for traders to have in their mindset. It's not abnormal for stocks to pull back, right? It's not abnormal for a stock to move from support to resistance and not go directly to support, from support to resistance, right? It may go up for a couple of days. It may fall. It may go up once. It may go sideways the next day, down a little bit, up the next day. It may do these things just like when it's coming back down to support. You notice there are some days where it goes up directly to support every time. This was a pretty fast fall, okay? So next up, well, what happened here? Okay, what happened? Well, the news this week, remember I said I'm going to tell you, how do I sift through all this news? What does all this stuff even mean? If you go over to CNBC right now, you're going to see a huge list of articles to read. Well, what do you really need to know? Well, you really only need to know one or two major news stories, okay? Certainly there's other news, and there's maybe news to do with this particular stock or that particular stock. But when you're looking to assess what is really the overall tone of the market, what's really happening out there. We say rising tides tends to raise all boats. I want to get into stock plays, option plays, when there is a general consensus of the market tone, which means that the price itself on the chart is headed a specific direction. It's positive or it's negative, but also the general tone in the news. Is that positive? Is that negative? And that's where it gets tricky because it's noisy. And there's so many people trying to tell you and me, Blair, go buy this. We recommend that. Did you know that XYZ stock is going to go to the moon next month? So-and-so analyst says that XYZ stock should be, and so on and so forth. So that's just sort of this noisy thing, especially for those of us who are new. We're not even interested in reading any of that stuff, right? But we need to know what's the main pulse? What's the main pulse? And we teach our students over time, how do I really learn for myself which news items are important and which aren't? And that's a really important process. Today, I'm going to tell you, this is the most important news item right now. And it can change, and it does change, but there's usually one, maybe two main news items. And right now, that news item is inflation. It's inflation. So the other day, back here, where you can see on the chart, there was a report that showed the inflation rate at 4.2%. Now, there have been a few different numbers and reports that have come out the last few days coming at this in some different directions, but really 4.2%, which was significantly higher than they expected. In fact, it's as high, the highest it's been since 2008, right? It's the highest it's been since 2008. Now, the market will adjust anytime it's surprised. See, this is something important for you and I to know about news. We sometimes think, oh, well, that news item will definitely move the market. And then it doesn't, and we wonder why. Wall Street only cares about what it cares about. And you're only going to see prices significantly move based on news when that news is actually a surprise to Wall Street. By the time you and I get news, it's usually not a surprise to Wall Street. They've already got that news. It's already what we call priced in. But when there is a report, right, that hasn't been announced, then that can be surprising. That's something where we see this volatility that we saw the last few days come into the market. Investors on Wall Street going, okay, a couple of things. Number one, the economy is moving quicker than we thought. There's this rotation, right? Some of these prices they're paying for tech stocks, they're saying, you know what? Don't want to pay that anymore. Bam. They start selling tech, taking profits. Tech has been moving down. Also, this could accelerate. Remember, we did an episode on the Fed. We did a whole episode on Market Monday looking at the Fed and interest rates. Well, if inflation's going up, with long story short, one of the things that they can do is use interest rates to help control inflation. There's already, comments and the memes all over social media, Facebook, Instagram, Twitter, Jimmy Carter this, energy shortages that, and a lot of it is just in jest, I think. But there are some energy shortages happening right now because of the pipeline attack. I don't think that's the main news article in the news, or in the markets rather. But I think there's that happening. And of course, they had significant inflation, hyperinflation. Okay. The inflation rates were up much, much higher. So there is this general acceptance and maybe some fear out there that, oh no, we're going to have big inflation. So if that were to happen, then the Fed would raise the interest rates. If they raise the interest rates, as I talked about in our Fed episode, then the market's actually not going to like that, right? That's what you and I need to know. They aren't going to like that. It changes some things for them, and that is going to create a change in the way they're approaching the markets. That's going to shift some money around, okay? There's more apprehension. There's other investments that they are then attracted to, and it can deeply affect the markets. Now, the Fed has already come out to say, we're not worried about these inflation numbers. We think that it looks the way it does because essentially we're comparing it to last year during COVID, deep into COVID. So that's skewing it. We don't really think it's going to remain this way. So we're not going to panic. And they actually made sure to say, we don't expect to change those interest rates at all based on this, hoping to calm the markets down, right? This was their opinion. Well, to be honest, in the short term, at least the last few days, the markets didn't really care. They didn't really buy it. They took it as a reason. Remember, I said oftentimes the chart and the news, it will coincide. They took it as a reason to go ahead and do a big sell-off. They sold off in the market. But what happened today? Stopped at the 50-day moving average, and it went up from there. Okay, we'll see if it can continue through, but up 50 points from the open as of the end of the day here in Texas, 3 p.m. Central Standard Time. So the news not necessarily sounding like we're going to see continued inflation. That's what I hear several prominent voices saying. But we got to watch Wall Street and see, well, what do they think about that? Because there are some other voices out there, very prominent, that are saying, actually, I think it is worse than they're letting on. They're trying to be peaceable and safe, but it could continue from here. So they're definitely paying attention. The question is, are investors and traders on Wall Street, what's narrative are they going to buy into? And do they feel like they need to be less risky? Meaning they're going to pull away from some of those higher risk growth stocks and they're going to move into some other things. If we see that happen, we're going to see some rotation in the market again. And that means some of those tech stocks and some other industries are going to get drained of so much capital. Those evaluations are going to come down and we're going to start to see some other stocks move up from there. And if you've watched in the past, you know, S&P 500 index is not all weighted the same. 505 companies in that S&P index, not all weighted the same. Tech stocks comprise a heavy percentage of the weight of the S&P 500. Now, it's not just tech stocks, but that is a big one, and it's been in the news this week. And you'll see the S&P likely have a pretty hard time moving up as strongly as it has been if we see a lot of that happen. As the time being right now, at this point, we're not going to see interest rates change. There's no Fed meeting for a little while. Remember, that's every 3 months. So, or I believe it's 4 times a year. So we're gonna wait and see what they do on that. But that is the major news item out there. I think we just have to pay attention to what are they talking about the most. Now, I'll say this last thing. I don't pay too much attention to the news. I am more interested in the chart. I'm more interested, but I do have that 1 or 2 major items in the back of my mind, right? I do understand what it is, and I make sure to have it in mind if I'm going to be active in the markets, because that's part of what's moving it. That's part of what's moving it. And I want to have an understanding of that. Even today, let's go back to the chart for a second here. Even today, yeah, we hit that 50-day and moved up, but we're in this key level right here. Okay, this was support back here. We've got the 5, 10, and 20-day moving average. You say, Blair, I don't even know what that is. What's that? What do you mean key level? What do you mean 5, 10, 20-day? Looks like the market might actually be at a really great spot. It hit the 50-day this day back here. That's before it went on a big run. You say, Blair, are you saying it's about to do that? I'm not saying it is because I don't know. I don't have a crystal ball, but I can tell you this. That's exactly what it did the last 4 or 5 times. It did go on a big run. Hit the 50-day. Today we hit the 50-day. We held strong there. You say, Blair, I don't necessarily know how to go through these or take advantage of these opportunities. Well, that is ultimately what we're here to help you do. That is what our Step 1 course is all about. If you've been on here and you've not taken our Step 1 Start Your Journey course, I talked about this on Monday, you're going to get in there for less than $100. Listen, you have financial goals. You have financial dreams. It looks like there was an error posting it to, oh no, it went on both Facebook and YouTube if you're joining us today. If you're on the recording, you can find that in the comments as well. If you've been joining us for a while, you're interested, you're seeing the content, you know that what we're showing you is an exciting opportunity. Ultimately, this is the way to get you in here. And it's not about trading, right? It's not just about trading. We can have fun with this stuff. It is exciting to feel empowered financially. That is exciting. That's exciting to me. But really what this is about graduations. This is about retirement. This is about getting out of that 60-hour-a-week job that you have. This is about creating momentum in your finances that gives you the ability to do some other things that you've been wanting to do but haven't been able to do. This skill set exists for that reason, and it's more popular than ever because people understand that this is something we can really do online. So start that step one, start your journey as soon as you can. If you haven't done it, like I said, it's $100, 2-day course. You'll get the recordings of it, and it's going to teach you the foundation of this system. And then you're going to come on here and join me week to week, and you're going to see and understand a whole lot more. It'll get activated in your life. And that's what we want to do. We want to get it activated in your life. So stocks can be hot, but they pull back. That's not abnormal. What to do from here if it doesn't continue up? What if it crashes through the floor? And then what do we do? Well, that's an exciting time for our options traders because they know how to take advantage of moves down in the market. And that's something we want to get you into as well. But you got to start with that Start Your Journey Step 1 course. So I popped that in the comments there. Go ahead and click on that. You can register and come on over and join us there. We'll help you with everything you need to get started. Troy, I see you there in Houston. I don't think I knew you were in Houston, Troy. Are you visiting there today, or is that home for you? I also see G in there, G Hatch. Beautiful day in Plano, Texas. It actually has been amazing. I am not ready for the Texas heat, the brutal Texas heat. Happy to be in Texas, 100%. But it's been a really great spring so far. So very, very happy about that. And I've had some good time outside. So that's been really fun. Well, thank you everybody for being on here. I know a lot of you, of course, are joining us on the recording. So thank you guys so much for jumping back in. Hey, if there's anybody you know out there who you want to share this with, you think maybe they would also want to hear this information. Maybe they think they don't, but you know it would be helpful. Go ahead and send it on over to them. You can always tag their name here on the page. You can always like, share. If you're on YouTube, make sure you subscribe, ring that bell. Let us know you're there. We will send you updates and you'll know everything that we are doing. Troy says, been here for 16 years. Okay, so that's definitely home. That's definitely home for you, Troy. All righty. Well, thank you guys so much for letting me into your home tonight. I really appreciate it. If you need anything, you know how to comment, question, send it on over. Let me know what I can do for you. I've been reading some of the comments lately. Really, really encouraging. Love hearing what this means to you guys out there. We'll be back, of course, on Monday for a Market Monday, and we will see you guys then. Thank you so much. Have yourselves a good night.